Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock, with news of a range of data that is turning decidedly ugly. First, US retail sales have come in with a very small gain in January, but that's better than a decline the month before. In fact, the December decline was widened with revised data, while the January rise represents only a 2.3% gain year on year. These levels don't indicate a strongly growing economy. A New York Fed study shows that American consumers expect prices to rise more slowly, a decline in inflation expectations that likely reinforces the official Fed reluctance to hike rates further in the meantime. Car sales in China continued their downhill run into February, falling for the 8th consecutive month. Vehicle sales in February totaled 1.2 million, down a chunky 17% from a year earlier. And Japan's machine tool orders slumped as well. They fell 29% in February from the same month a year ago, the fifth straight drop, and the rate of decline is getting steeper as overseas demand for these investment goods dries up. In Germany, plunging car output drove an unexpected drop in production of German goods in January, and an industry body there cut its 2019 growth forecast, adding to signs that trade war tensions and unease about Brexit are weighing on Europe's largest economy. And this is despite a very large flow of funds out of the UK and into Europe ahead of a hard Brexit. A new study shows that more than $1.5 trillion has already flowed, equivalent to about 10% of the UK's banking assets. And Turkey is in recession, shrinking by 2.4% in the fourth quarter of 2018 from the previous quarter. This follows a 1.6% drop in the previous quarter. And you wouldn't know any of this from equity market movements. Today, Wall Street is up 1.3% in a risk-on shift in sentiment. That follows a good rise on most European markets, and they followed strong gains in Tokyo, Hong Kong and Shanghai. Perhaps markets sense the US-China trade talks will end well. Perhaps they're blind to the economic data. Or perhaps they sense major new money printing is on its way. Who knows? It is hard to find any analysis that can reconcile investor mood and the global economic data trends. US Treasury 10-year yield is a little firmer today, up by 1 basis point and now at 2.64%. And gold is lower, down to $1,292 an ounce, a $6 fall since this time yesterday. And US oil prices are now just over $56.50 a barrel, while the Brent benchmark is just over $66.50 a barrel. That's a small rise overnight. And the Kiwi dollar is at 68.3 US cents and a little firmer. On the cross rates we've gained on the Aussie and now at 96.8 Aussie cents, which is the highest level since 2016. Against the euro, we're up to 60.8 euro cents, and that puts the TWI at 73.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.